What's up, boys? Today took one trade on NQ, ended up being a winner, but this was kind of a degen trade. Now let me explain. We'll hop into the chart and show you guys. But this is my top step 50K combine so far. We're doing all right. So what is this? One trade took partial, so that's another three trades. Up 180. Need 3K to get the express account. Gonna start leveraging a little more and maybe start risking the daily loss limit. Fuck it, we'll see. But let's hop into the charts and let's show you guys what price action did today. So as you can see, we have a bunch of lines drawn out in the chart here. Now these lines represent lows and highs. And what these lows and highs do, they are targets. They are magnets for price. You see, I had these lines drawn, and look, price comes and rips through all these lines. So let's just first go over my trade that I won on. So when price takes out a high, most of the time, not most of the time, but like if it does gives you the right reaction, sometimes it gives a short-term reversal and takes out the opposing line. So if we see here, we have equal highs here, 1, 2, 3, and then we have equal lows here, boom, right here, like 1, 2, 3 right here. So we take out this high, and then we have a gap. This is what you call a fair value gap. Boom, boom, right? So we see we have this bullish green fair value gap. I'm looking at the charts. I see we sweep this high, and I'm on the 5-minute as well. We sweep these highs, but just barely. I don't know if you guys can see that, but we come and sweep. We inverse this gap. We close below this gap. In one candle, we fully inverse, right? So then I just set my entry, and I target the nearest low, 5-minute low. And I saw that the risk to reward was pretty good, considering it's a pretty nice trade, I guess. And it smacked within 5 minutes, 5-6 minutes, $100 in the bank, as we see right here. But the reason why this is kind of a degen trade, let's just get rid of all this, is because this really was just a random trade. I didn't have an hourly or 15-minute sort of bias, you know. What I was looking for today was, as we can see here, let's get rid of all this real quick. In the beginning of the day, what I do is I look for draws on liquidity. So I see that we have this high here on NQ. Then we go to the 4-hour. I see, actually we go to the daily first, and we see that this imbalance, this gap, is also a draw on liquidity, right? So I see this unmitigated gap, and that's another draw in mind, right? So we can just get rid of this gap and just place a line for it, because this low is the top of that gap. And then we see some other lows right here, boom. And then we see some highs here from February 18th, so that'd be yesterday. Boom, 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 boom. Then we keep going down in the time frames, and we see boom, 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 boom. So February 18th, right? So you see this high as well. But let's just act as if it's at 9 o'clock, right? So I see obviously this high as well. Boom, boom here. This is equal highs here. So I see that yesterday at 8 o'clock we sell off, break structure on the hourly, right? Then today, what do I see? Originally, I wanted to see price come into this bullish gap, and these gaps act as support, right? So originally, I wanted to see price, because we have so many draws up here. We have this high, we have these highs, we have this high. I'm kind of expecting price to respect this fair value gap and do something like this. Come down, boom, and then react off the gap and push higher, which we did. Hold on, not this way. Boom. Which we did, but we just didn't do it in the way I thought we were going to do it, if that makes sense. Because we ended up inversing this fair value gap. So that tells me, so the fact that we inverse this gap tells me that price is then aiming for this low down here. So at around 9:30 when market opens, I'm expecting price to take out this gap, because price is always hunting for some sort of liquidity, and there's really no other liquidity in this region except for this low. But what I think ended up happening is some sort of, this is what happens. Trading is very random, and sometimes shit like this happens. But we get a DOL flip, and the draw, something happened in the market, and the market was obviously aiming for this low, but then something happened. Someone, whatever, you can call it an algorithm, whatever. The market is random, you know, like sometimes it's just gonna happen, and that's okay. You can still make money off it, like I did today. But so the DOL flipped, and we started to make a bullish structure, right? You can see this first happens here. We flip this bearish fair value gap. We break structure here, right here. We can just mark that for you guys here on the 5 minute. So then we see that on the 5 minute, we're now printing higher highs and higher lows. So the real trade I should have taken should have been from here, because as you can see now on every time frame, not every time frame, but like if we were bearish, right, and we were gonna take out this low, we would have done it without this retrace. Once we break these highs here, we have to adapt to the market and understand where price is going. Like price isn't going for this low anymore. We're either going for these highs, these low resistance highs, or we're going for some sort of all-time high up here, or we're going for some sort of gap. But the thing is, there were no bearish gaps to be targeted, so you kind of just gotta assume we're going for these highs. Like, yeah, you can say maybe these 5 minute gaps, but look, we already filled those gaps. So when we break structure here and here, like where could we target an imbalance? It's pretty much just highs. So then I targeted, once we break structure, especially at this level right here, this is the obvious draw right here. This is the obvious draw. These are the next obvious draws right here. So now that we know that we're bullish, what are our targets? These low resistance highs. So what do we do when we know our direction? We wait for a retrace into a PD array of some sort. So we see prices coming up, but we really have nowhere to enter from. So what do? We come, we barely take out this high. We retrace into this imbalance right here. Let me see, it might be an imbalance on the 15 minute as well. Yes, actually no, it's not. It's not on the 15 minute, but on the 5 minute, we can see there's an imbalance, and that's when we would drop down to the 1 minute and see what the hell is happening. So 1 minute, boom, we could take this inverse 1 minute for value gap. But even if when we go in the 1 minute, there still really isn't an entry. That's why this day was pretty rough for a lot of people in the SMC who trade this style, is because the obvious target got missed, bias got flipped, right? And yeah, there's nothing really else to say about that. Like, we retrace into this area, but again, like, this is already at 1 o'clock. We come in, boom. I guess what you could have done was maybe place a limit in this 1 minute bullish for value gap and take price higher, hoping to hit this high. But then you would have gotten kind of stopped out here. Yeah, I'm not really sure what the ideal trade would be for today. This was kind of a weird day where I low-key shouldn't have even taken any trade, right? But I saw that we swept this high right here. So this is one DOL. And then when a DOL gets hit and then we see a reaction like this, where we inverse bullish or value gap, we're obvious, in my opinion, it's pretty free to target these nearby lows, because like what else would price be going for? Like if we're gonna go higher and price is gonna take out all these highs, wouldn't price hold this imbalance and move higher? The fact that we inversed it completely showed me that price needs more fuel to go higher. So then what we could have done is wait for this liquidity sweep, and then what we do is we wait for this bearish imbalance to get inversed, which it does right here. And then what you could do is something like this. You see that we swept, we inverse this for value gaps. Now price is showing me that, okay, we're now ready to move higher and take out all these highs. So once we inverse, we can look for a new PD array to enter out of, and we see this beautiful 5-minute imbalance right here. Boom. So we can take this out because we already swept these highs. So the next target could be these levels here. So we go into the 1 minute. We know that we're bullish for sure now. And what do? Boom. We come down and we break structure a little bit on the 1 minute. We see huge displacing candle, big fat juicy candles. We could enter up here, put the stop loss down here, 22 points. Target this high for easy 0.68, and then target the next high 1.2, next high 1.8. But honestly, this is pretty bad risk to reward. So I would have honestly not taken this, and I would have maybe waited to see a retrace and then some sort of confirmation up. Maybe something like this here, because this is a huge candle. Maybe set my target like this, and boom, move it like that. But even that's not too good of risk to reward. But yeah, this day was really tough for trading. Still happy I got the win though, but I'm not gonna be too ecstatic about it, because I know it wasn't the best trade. The best trade would have been if the market actually went to take out this low and I got involved in some sort of short around 9-10 o'clock, and we actually went up down to take these shorts, take the low out. But regardless, this shit is good. Made some imaginary prop firm money. And yeah, excited for tomorrow. I hope you guys did well, didn't blow up your accounts, and deuces.